opening at 9. Alright. Alright, thank you guys so much for tuning into today's live stream. Today is March 11th, 2025, and to begin the live stream, I want to take a look at the economic calendar here for today. So we have Joe's job openings at 9 a.m. and I believe that had already passed. 9 a.m. And so, but I don't know if it's 9 a.m. my time or 9 a.m. Huh. I should be. Let's see. I don't know if this is my time or their time. It might be my time actually, because it hasn't released yet. But yeah, we have a red photo news here at 9 a.m. which should bring in volatility coming into this week. I didn't actually do a weekly market outlook coming into this week because I was away from home, but based on how we closed here on the weekly candle last week, so this weekly candle right here, it's my assumption here, what I am anticipating would be that this weekly low, so the weekly low based off of that candle would be the objective, right? So I wanted to see us take out previous week's low here coming into this week based on the daily time frame. With the way that we closed here on Friday, it's really bullish. So I was actually anticipating for prices to take out the previous day high, but coming into Sunday's opening and Monday, we actually ended up taking out previous day low instead of previous day high, and we took out previous week's low as well. So after we completed the weekly objective, I had no longer a weekly bias, right? I can't use the weekly time frame anymore for a higher time frame bias. So coming into today, I wanted to base my higher time frame objective on the daily candle here on Monday. And with the way that we closed here on Monday, it's easy for me to anticipate that previous day low was the draw of liquidity, right? So here is the draw of liquidity, and I wanted to see prices take out previous day low. After we take out previous day low here, coming into the London session, I can't use the daily time frame. So notice how these concepts that I'm applying it to every single one of these time frames. So I applied it to the weekly, I then applied it to the daily. So coming into today, coming into this morning, I don't necessarily have a bias. I would select, or I like to use the 4-hour time frame and the 8-hour time frame for a intraday bias, right? So once this 4-hour candle and this 8-hour candle closes, I can actually come up with a bias, right? So these two time frames here, they're going to close in about 23 or so minutes. So once those two time frames closes, there's a new opportunity that gets presented, right? And yeah, based on the 4-hour candle and the 8-hour candle, I would then select or elect a bias. But as of right now, they haven't closed yet, so I'll give it some time. And yeah, hopefully, I wish I explained to you guys my thought process there. But as of right now, not really gonna force anything here. Weekly objective, daily objective has been already completed, so I don't want to force anything here. And yeah, so I mean, us selling off here is pretty interesting, right? We have, like, fundamental wise, we have a lot of negative news, I guess. We have the tariffs, which the markets don't like. We have tariffs, we have a possible recession coming, and just in general, a lot of volatility, right? Consumers, they believe that consumers aren't spending as much. I believe, based off the Wall Street Journal, it did state that consumers are spending less, which caused airline stocks to drop, and even Tesla is dropping due to the belief that Elon Musk is putting more attention towards the Doge, Department of Government Efficiency, and then Tesla. But yeah, I mean, we're just gonna have to just continue to wait, be patient, not really force anything to happen here. We have a lot of news here coming into this week, actually. So tomorrow, on Wednesday, we have core CPI at 7:30 a.m. and then we have PPI here on Thursday, unemployment claims, and Friday we have consumer sentiment and inflation expectations. So we have a lot of news, and yeah, it's going to be quite a eventful week this month. This is the monthly candle, and this is only the 11th day. Let's see how much movement we have. Let's see how much we have moved so far. So we've moved in a total of 11 days, basically 2,000 points, right, on the NASDAQ futures. This is a lot of movement. We're selling off quite aggressively here, and we even retrace back into the discount of that dealing range. So discount of that dealing range. We could possibly create a fair value gap here, but let's take a look at the 12-month candle. So this is the 12-month candle here, right, on NQ. Based off of this candle right here, it's easy for me to anticipate prices to take out the 12-month high. But with the way that we're closing here on the monthly candles, 2-month candles, it's not supporting the idea of higher prices. So we're just going to have to wait and be patient, not really force anything. Coming into this monthly time frame right here. 18 minutes left until we close here on the 4-hour candle. All right, let's see. Should I go over the journal here with you guys before we open up? And I think I'll just do that actually. So let's take a look at just the pros and cons here from the previous week. Right after I finish my food actually.
Snap your W-2 and file your taxes 100% free.
Let's watch a video together, shall we?
File free.
Nobody ever gets rich when the interest rates are high, because people can't borrow money.
Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
You can't really watch the stock market. You have to do what's right.
What's up, you guys? It's Graham. So I don't usually do this, but 2 weeks ago, I issued a warning to stock market investors. And unfortunately, since that video, things have gotten a lot worse. Just today, the market has seen its worst drop since 2022. Panic usually creates more panic, selling pressure creates more selling pressure, and prices are falling purely because prices are falling. So similar to my previous video, I'd like to help put into perspective exactly what's happening, why the market is crashing, how things could get worse before they get better, and what you could do about it to put yourself ahead financially. Yes, I'm probably going to have to repeat myself a few times, but at least you should understand the truth about what's actually going on. As soon as you hit the like button and subscribe if you haven't done that already, that's all I ask for. It helps the channel tremendously, and as a thank you for doing that, I will do my best to read and reply to as many comments as I can. So thanks so much, and also big thank you to Incogni for sponsoring this video, but more on that later. Alright, now, in terms of why the market's crashing, as of now, we have the perfect storm, starting with tariffs. Now, here's the thing when it comes to talking about tariffs. So far, here's how they've worked. Trump threatens tariffs by a certain date. The market goes down, but eventually starts to recover. On the day tariffs go into effect, the market plunges because no one expected it to actually go through. But 24 to 48 hours later, an agreement is reached that gives an extension. The market goes back up. And then the process repeats itself when tariffs go back into effect, waiting for another agreement to be reached. This volatility starts to give the impression that tariffs have simply been used as a negotiation tool to get more favorable trade deals within the United States, but the market never actually priced in the likelihood of them sticking around. Until this, it's currently scheduled that a 25% tariff on steel and aluminum imports are set to take effect March 12th, while a 250% tariff on Canadian dairy products could be next, along with a tremendously high tariff on Canadian lumber shortly afterwards. On top of that, what's really fueling the tariffs is that he said tariffs may still go up as time goes by. Now, even though that 250% dairy tariff has largely been debunked as an item that's not even going to begin going into effect, since they will be allowed a certain amount of dairy to enter the United States tariff-free, business owners are completely puzzled by what to expect, if they need to order inventory ahead of time, or if they have to start raising prices to cover overhead, to which Trump provided no additional information. To make matters worse, Canada retaliated by enacting 25% tariffs on electricity imports to New York, Minnesota, and Michigan starting right now, and China slapped back with 15% tariffs on American farm products. As a result of this, investors are beginning to price in the likelihood of higher prices, lower GDP, recessionary fears, and the potential that things could soon get much, much worse. But there's a second reason the market could be falling that most people have no idea about, and that would be Trump crashing the market on purpose. First of all, it's important to clarify that this is just a theory. But you know what? Nothing surprises me anymore. So here's what we know to be fact. Right now, it's no surprise, the government owes a lot of money. The national debt is currently sitting at over $36 trillion, and that number is only expected to keep going higher, which is soon going to cause a lot of problems. Why? Well, when you have a debt this large, you have to pay interest on the debt. And when interest rates are at record lows, paying off the debt is very easy. Like, imagine it to be like a mortgage. Taking out $1 million loan at 0.5% interest is as simple as spending $5,000 a year to keep current on your monthly payments. But what happens when interest rates go up during a time that you're borrowing a lot more money and you've only locked in that record low interest rate for a few years? Exactly. Since interest rates have gone up significantly, the United States is now spending more money on interest payments than they are on defense for the first time ever in history, which is massive. And in 2025, there's another $9.2 trillion worth of debt that needs to be refinanced. This means they either need to lock in rates when everything is high, or they need to create a market crash, which causes interest rates to fall and gives them enough time to lock in interest rates for the next few years. Again, even though a lot of this is just a theory, some of it does make a lot of sense, because 70% of the $9.2 trillion debt needs to be refinanced by June 2025. And if nothing is done, that debt is scheduled to cost 1% more, which is reported to be $1.56 worth of cost for every $1 of revenue that the United States generates. Think about it. For Trump, this could be a huge win to refinance the national debt at a lower interest rate than usual by forcing the Federal Reserve to lower interest rates. Like, here are some quotes that I've pulled from Anthony Pompliano, who's taken the time to compile some choice words by Donald Trump. Here you go.
I've been saying, let's get interest rates down. Nobody ever gets rich when the interest rates are high, because people can't borrow money. Interest rates are going down. You know what else is going down? Energy's going down. I'd love to see energy go down.
Is that what you meant? The stock market going down was the disruption? What other disruption
Oh, yeah,
were you
Batman.
alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
You can't go by that. You have to do what's right.
All of this paints the picture that maybe this is his way of reducing the cost of the national debt. Perhaps he could frame it as such a way that he's making asset prices like stocks, real estate, and Bitcoin more affordable to middle-class Americans by giving them a 10 to 30% discount. And if short-term pain is what's needed, then he's willing to get there by any means necessary. Although, in terms of how bad things could potentially get, you're going to want to take a seat. Although before we go into that, just like it's really important to protect your investments, most people have no idea that their most important asset can actually be their data. For instance, the number of recent data breaches is growing, having increased almost each and every year for the last decade. This means, like it or not, your personal data is probably already floating around. This could include and more. It's absolutely horrible. The good news is that you have a right to protect your property. And it's so interested in protect plan down below. And now, on a broad scale, there are 3 different types of declines that you're going to want to be made aware of. The first is what's known as a stock market correction that's defined as a drop of at least 10%. Now, it's important to recognize that normal volatility throughout the market is extremely common. Like, since 1920, the S&P 500 has, on average, seen a 5% pullback 3 times a year, so random fluctuations happen all the time. This is also somewhat the case with market corrections, which have happened on average every 16 months. In fact, if you're like me and you like averages, so far the average stock market correction has been 15.6% and lasts for 71.6 days. So it's perfectly normal, and every healthy market sees a regular pullback from time to time. However, after that we move on to the more serious category, and that would be a bear market, which is defined of at least a 20% drop from the peak. And this is where the NASDAQ might soon be approaching. According to the data, this typically hits every 7 to 10 years, and when it hits, unfortunately, it hits kind of hard. During a bear market, the stock market drops on average 33.2%, and it falls over a period of 363 days. Now, it is important to clarify that these are just averages, and it doesn't mean the next bear market's going to fall exactly 33% and last for exactly a year. For example, in 2020, we saw the fastest 30% drop in history since the Great Depression, and then right after that, we saw the quickest recession in history, which lasted just 33 days. So anything can happen. Although, in terms of taking it even further from here, things can always get a lot worse, and that's what brings us to a stock market collapse. I would consider this to be a drop of at least 40% throughout the entire market, and not just in one sector like cryptocurrency. And over the last 120 years, this has only ever happened 3 times. This is why a market collapse is rather uncommon, but it's not impossible to happen throughout our lifetimes, which is something that everyone needs to keep in mind. But in terms of what you could do to use this as an opportunity to come out ahead profitable, here's my take on this. First, when it comes to building wealth, it's important to recognize that there's always going to be a reason not to invest. Like when I started buying real estate in 2011, the overall market had already fallen 50%, and I was buying some of these properties for 20 cents on the dollar. But I was told to wait because shadow inventory was about to be unleashed on the market and prices were about to fall even further. But guess what? That shadow inventory never came, the market recovered, and I'm so glad I didn't listen to all the people who told me not to buy. Even in early 2017, when I started making videos here on YouTube, there were so many headlines about how the market could be poised for a crash, or how the market was overvalued. But I just kept dollar cost averaging on a regular basis, and I'm glad I did. The same thing applies to 2020, 2022, and I'm sure even today. Second, investing is not a game. I hate to say it, but when you really get down to it, investing shouldn't be fun. It should be pretty boring. I know that sounds weird to say because for me, investing is a total blast and I love it. But it's not a sign of a healthy market where people are trying to YOLO their life savings into whatever is the hottest stock of the day to try to get a brand new Cybertruck.
Since you're new to H&R Block, we'll go through your tax returns from the past 3 years for any money your last guy might have missed.
I could get a certain point. You have to remember, if you're trying to beat the market average, you're either taking a calculated risk or you're gambling. And the line between the two has gotten incredibly blurred over these last few years. Third, overconfidence is going to destroy your portfolio. The moment that you think you have the entire market all figured out, you've lost. Because of that, it's really important to recognize that the less you know, the better you will do, because you're not going to overcomplicate things and take unnecessary risk for gains you never needed in the first place. For example, every single study shows that the best investors of all time simply buy into an index fund on a regular basis and hold it for 20 years. This is why dead people often make the best investors, because they don't touch it. They just buy and they hold. And that is what chances are you probably need to do as well. Fourth, let's face it, a market drop is probably going to be a lot worse than you expect. Like, you know when you see a decline, so you buy in, and then it drops even further, so you buy in even more, and then it keeps falling until eventually you run out of money and it keeps falling even more? Well, generally, market bottom takes place at absolute investor capitulation, where people think the economy is forever finished, no one is buying in, and people think to themselves that it'll just continue getting even worse. This was the case back in the worst of 2020, 2010, and I'm sure back in 2001, even though I was too young to remember that one. Every generation, I promise, is going to have their own moment when they think to themselves that this time is different, and even though it's always recovered in the past, this time, today, has never been like anything before, and we're probably all finished. That's why I tend to think that it's reasonable to expect that things can always get a lot worse than you expect them to, and just to be prepared for that. Fifth, good financial habits should be practiced in both good and bad markets. Even though now is certainly a great time to work some extra hours, take on a side hustle, cut back on unnecessary spending, and invest the difference, ideally, you should be doing that regardless of where the stock market trades. Yes, I understand it's not cool to live frugally and live below your means when everyone else is making 10x returns on meme coins, but I promise you, if you just stick with it long term, it's going to pay off 10 times more in the future. I guess I've just seen so many careers come and go, so many businesses go bankrupt out of nowhere, and so many investments lose value that I just tend to be overly cautious about what I do. Plus 6, it was found that in the event we hit a bear market, that half of the S&P 500's strongest days in the last 20 years occurred during a bear market, and another 34% of the market's best days took place in the first 2 months of a bull market before it was clear that a bull market had even begun. This is really important to mention because if you just miss the best days of the overall market, your returns drop substantially, and if you stay out of the market, it's even possible to begin losing money. This is why, regardless of what happens to the stock market or how bad the sell-off gets, there's always a reason to say this time is different. Sure, the market might continue selling off much more than we initially expected, or it could rebound the next day. I have no idea. Time is different. Sure, the market might continue selling off much more.
Alright, so let's get back into the actual charts here for today. So we're about to close here on the 4-hour candle in about 2 minutes. And let's take a look at the 8-hour candle here. So 8-hour candle, 4-hour candle, closing in about 2 minutes. Based on how we close here on this 8-hour candle, with the way that we're looking here, I am actually not entirely too confident in higher prices or lower prices, as well as the 4-hour time frame. So both of these time frames, as of right now, I'm not entirely too confident in, right? Bye, Ma! I can't really, select the buys here. It's too unclear with the way that we're closing here. The only thing that I can anticipate is that we're going to continue to rebalance inside this 8-hour inefficiency here. And bye, Ma! And yeah, it's just rather interesting, right? Let's take a look at the 15-minute time frame. So like I said, very yeah, I mean, with the way that we're closing here, I can't really say anything. Like I said, 8-hour candle, 4-hour candle, especially the 8-hour candle. It's really like, it's almost like a doji candle. I can't really anticipate either the high or the low to be taken, right? Here on the 15-minute time frame. On the 15-minute time frame, it's suggesting to me that we could possibly rebalance into this inefficiency, right? And trade up like that. If we respect it. If we respect it, then we're going to rebalance and then continue higher. But yeah, let's take a look at the on ES here actually. Bye, Ma! Alright, so there's the 10 o'clock open. And I believe the news just opened up too. So we have jobs openings. It was positive. But yeah, coming into the charts. Like I said, no buys here. It's rather indecisive on the 4-hour candle and the 8-hour candle. So what I'm actually going to do is I'll go over some of the pros and cons here from 2 weeks prior. Start off with the first one here. So consistent models, right? Every single trade that I take, I should be able to identify what a higher time frame objective is, what my model is, how am I going to align myself with the higher time frame objective. That is essentially what my model is. And a entry pattern. My entry pattern will always be a fair value gap. Fair value gaps are, for me, the easiest to see, and they're more objective, right? Order blocks, they're a little bit more subjective. It being like, is this last down close candle here, or this down close candle here, should it be considered a order block? To me, I can't operate like that, right? So I decided that my entry pattern will be the fair value gap. So consistent models, right? Every single trade that I take, I should be able to identify all of the components. And if someone were to ask me, hey man, why did you take this trade here? I should be able to break it down fundamentally, and it should be easy for me to identify the higher time frame objective, a model, and an entry pattern. Second, time frame alignment. Time frame alignment is key, right, in the way that I trade, because time is the most important aspect here. So imagine time frame alignment as reading a book from page 1, page 2, to page 3, to page 4, to page 5, etc. But let's just say that you were reading your book from page 1 straight onto page 50, right? You skip 49 pages worth of information. You have no idea what happened in between those two pages, right? From page 1 and page 50. You don't know if there's new characters that has been introduced. You don't know what happened. You don't know what the plot is. Was there a major event in between those two pages? And essentially, time frame alignment is not going from the weekly time frame on to the 1 minute time frame, right? Weekly time frame all the way to the 1 minute time frame. There is no correlation, right? The proportions is not there. You want to go from the weekly time frame onto the daily time frame, daily onto the 4-hour time frame, or it could be the 4-hour higher time frame objective onto the 1-hour model, straight onto the 15-minute fair value gap or something like that, right? So understand time frame alignment, and the analogy I used, like I said, read a book accordingly from page 1, page 2, page 3, etc. Third, there was a trade here that I took during the week of February 24th till February 28th, where because of the lack of SMT, I anticipated a continuation lower, right? A strong high and a strong low will always be accompanied with SMT. And SMT is essentially just some sort of indicator almost, right? It is a price action indicator that will help us see where there has been manipulation in between the markets. And like if I were to show you guys the ES chart here, right? So ES, we have taken out this high here, whereas NQ, or ES failed to take out this high, whereas NQ did. So there is a SMT here between, there's an SMT here between NQ and ES. And so this strong high here that just occurred would be considered manipulation, right? And so if you know that there's a lack of SMT, that means that low should not be a strong low. We should end up taking out that low. And it's better for me to explain to you guys through an example. But just keep in mind, lack of SMT. Just pay attention to SMT. Fourth thing here. Selling above the open and selling below the and buying below the open in bullish conditions, right? If we are anticipating, or if I am anticipating a candle to be a up close candle, right? If I'm anticipating a up close candle, it's good to assume, or it's best to buy below the open. So if we open here and I'm anticipating an up close candle, then my best buys will actually be in this scenario right here. So this would be considered buying in discount. So anywhere below the open in buy conditions would be the best buys, right? It's essentially buying in discount. And there's that. And you can do that vice versa, selling above the open too, right? In a bearish candle, if you're anticipating a bearish candle formation, then your best sells are going to be above the open. Fifth but not least, remaining patient. Sometimes the conditions in the markets aren't exactly favorable for your strategy, right? Your strategy sometimes is not going to be present in the markets. So if that were to happen, you have to remain patient and disciplined. You have to understand that you do not have to force anything to happen, right, for you to be a profitable day trader. You can't force an idea onto the markets. You can't force a strategy onto the markets if the conditions and if the structure in the markets doesn't align itself with your strategy. So remain patient, right? And what are some things that I can continue to work on here? Consistent thoughts and actions that aligns with my goals and my values. Just keeping in mind that everything that I do has to be aligned with who I am or how I view myself in the future, right? And yeah, so consistent actions that aligns itself with your goals and your values. And second, learning. Just build this foundation of knowledge and continue to grow whatever that you're passionate about, right? What is your calling? And my calling here is I've always wanted to help people in my own way, right? Whether that be through, becoming a doctor or whatever. That's just one of the values that I hold dear to myself, right? Is creating value and be able to help people with what I'm good at. So initially, when I first started my whole schooling career, right, I thought that my field of study was going to be healthcare, becoming a doctor, pediatric nurse, or whatever, to be able to help people. But as time went on, as I experienced more things in life, I decided that healthcare isn't something that it's not something that I can maintain. I can't maintain I don't know, it takes a different mindset going into the healthcare field, right? You're going to be constantly seeing sick people, and it's just something that I know that it's something that just know that I won't be able to do for a long period of time. So I had to pivot, and I've always liked financial markets, right? I've always traded for a while now, for almost 3 years. And so if I can help people make good financial decisions, that's going to be what I'm going to do, right? That's my career of choice. So what I'm going to do is I'm going to obtain as much knowledge as I can, obtain all the knowledge that I can accumulate that will provide value to others and be able to help me help others. So some improvements here for next week. Consistent trades. Like I said, every single trade that I take, I should have a higher time frame objective. I should have a model. I should have a entry pattern. All of those should be identified before the trade even happens. And I should be able to identify all of those components and be able to explain to about anybody in the trading space, right? Second, implementing and preaching the importance of time frame alignment. So understand time frame alignment, right? Example, 4-hour order flow, hourly model, 15-minute fair value gap. Weekly order flow, daily model, 4-hour fair value gap. Reading from page 1, page 2, page 3, not from page 1 straight to page 50. Understand, prices is fractal, but you have to understand that every single time frame has an objective, and if one time frame's objective is higher prices and the other is lower prices, then they're not necessarily in alignment with one another. And that means there's no correlation, right? So which is why it's very crucial that you go from one time frame onto another, relative. Third, be patient. Don't force trades. Allow the markets to come to you. Sometimes the conditions in the markets aren't favorable for your strategy to play out. And fifth, learn and continue to learn. Knowledge is something that cannot be taken away from you, and it's going to be your biggest strength, right? Your biggest strength isn't your house. It isn't the cars that you have. It's your knowledge. And knowledge can be grown exponentially, right? It can never be taken away from you, as it's all in here. And yeah, so going back into the charts here, turns out that after we traded back into the 15-minute fair value gap, as I'll show you guys here, so we traded into the 15-minute fair value gap, we ended up taking out the hourly high and the 4-hour high, but then right after that, right after we took out the 4-hour high, we reversed. And then, yeah, today, I don't want to force anything here, right? Super interesting. Just something that I do not want to be a part of for today. And it's coming close to about 40 minutes here on the live stream. I've gone over basically everything that I did want to go over. Like I said with you guys, I don't have a weekly objective anymore. My weekly objective coming into this week was previous weekly low, but yeah, and coming into today, my objective was the daily low. After we completed those 2 time frames objective, I can't use those time frames anymore, so I'm just going to have to use the intraday time frames, like the 4-hour, the 6-hour, the 8-hour, and the 10-hour candles. And yeah, that's going to be all for today. I'm not going to be live streaming for the rest of the week. I'm going to be away for a Colorado trip. So until next time I see you guys. Thank you guys so much for tuning in.